chill investors. Alrighty. We love red days. Today is a red day. Obviously, your whole account, yes, it might hurt a little bit, but red days are opportunities, okay? And what are we looking for when we're running the wheel strategy is opportunities, okay? I have 10 of my kind of favorite ones right now to take opportunities in. So we're going to kind of go through them and take a look and see what I'm kind of what I'm seeing on my end, talk through it so you guys have an idea of what to look for. Okay, so number one, I'm a huge fan of Oscar. I think probably one of my largest holdings. Um, and we were buying this a while ago, but I still think it's a great opportunity, specifically on a red day. Okay, so we are currently at this top half. Okay, so any news right now that comes out over the next 2 weeks that can bring us down back under 20, I will be looking for cash secured puts at the 18-17 range. Okay, that's what I'm going to look for. I'm looking to add. I think that there's going to be great news towards the end of the month. Again, our investing style isn't the boring, safe haven kind of companies. We're looking for growth. We're looking to truly get into growth companies at a great value. Okay. I think anywhere here in the Oscar, right here at this 18 to, 15 is amazing entry, but 17 right here at the bottom of the band is great. We just needed to get under 20 for that opportunity to present itself. That opportunity was there, Monday or Friday, whatever day this was. What day was that? October 10th. I think that was Friday. Okay. And then we had a great recovery Monday. So we had an opportunity. I'll be looking to take more advantages of this company if we can get that opportunity to present itself. Okay. Most of mine are going to be small caps. The reason I say that is because right now I do see a lot of more momentum in the small caps than I do in large caps or mid caps. Some in the mid caps. But mainly what I mean is IWM. I see more momentum, more potential to the upside with IWM than I see with SPY and QQQ. I think SPY and QQQ have ran way more than IWM have. So I think it's IWM's turn to have a run. And that makes sense with rate cuts coming, okay? Um, Amazon, though, right, is going to be in your QQQ and your SPY. The reason I have this on my list as far as my top 10s go is one, we're at the bottom of the band. We are sitting at the 200-day moving average on the daily candles. We got an RSI of 38. I mean, guys, the RSI at 38 wasn't that since August, that August dip. So we're right back there, okay? And the only time we were really below that was during that whole like April crash, okay? Other than that, this is just another buying opportunity. I mean, really, this company hasn't gone anywhere since. Here's 2024. 2024 here, okay? And again, if this is 2024, it was $200 a share. We're currently at like 213, okay? 2021 COVID time, where were we? High of like 188. Okay, for all the companies out there during this whole time since 2021 to 2025, right? Now, like, for example, obviously, we're going to have NVIDIA, right? What has that done since 2021, right? Well, we have had some explosion. Granted, Amazon was more fully developed since then. But again, where's Google? I think Amazon's by far, yeah, look at Google, was 150. Now it's up to 250, right? $100 more a share. Amazon's cap was like, I don't know, $40, $60 more a share. And what do we have? Their RSI currently at 63. Okay. So who's a bit better buy right now? Well, I would say Amazon's a better buy. I think long term Amazon, I think over the next 5 years is a winner. I don't know. I use them nonstop. Amazon. I remember my mic went out. I ordered it in the morning at 9:30, 10 o'clock, and by 4 o'clock in the afternoon, same day, my mic was here. Okay. That is something I can't replace with any other company. I couldn't even tell you one that's even close. Okay. So Amazon, for me, next 5 years, 10 years as of right now, with their AI platform coming into play, their home services coming into play, shipping. They're going to be, Bezos is trying to go to space. There's a lot of things. And if any company can just partner with Amazon, just so you know, Amazon's not going to them. Other companies are coming to Amazon. Amazon's trying to get into the health sector. There's a lot going on. Amazon, I think, is a monster. It's something that you just buy and you continue to buy when the value is there and you just hold. Okay. Another growth one we're looking at is Webull, as you guys know, is like Robinhood, like the platform we're looking at, right? Webull, I think, is a huge opportunity. Obviously, you had the IPO day when it ran, blah, blah, blah. And now we are down here, bottom of the band, CSP land right here. And we have an RSI of 34, okay? Right now, while the market's been running and booming, I'm looking for things that have a nice low RSI that's telling me I'm buying these growth companies at a good value. Bottom of the band, that's what I'm looking for. So I have CSPs on Webull. What do they look like right now? Let's go take a look actually on Webull. Oscar's not ready, so I'm not going to look at it. Amazon's ready. We can take a look at those. But Webull, let's go ahead and take a look at that one. All right, so let's go ahead and pull up Webull. And I know I have some contracts. So I'm looking for November 21st. I'm kind of keeping an eye on the end of November time frame. So 36 days out, right? We're going to be selling a put. And if we go here, here's a 25 delta, okay? 61 cents. Okay. If this stock got to $10, by the way, we'd be right here at this bottom. Last time it was down here in this price range. First of all, the RSI would be significantly down in the 20s range. So as you can see here, we had a nice run up also back to 18, So we've had some good run up. So it looks like 10 is where our base is. Are we going to see that? I don't think so, but if we do, I want to buy it for sure. So what does that look like here, right? So what we're going to do on our wheel tracker and calculators, current price is looking like $11.50. Put option strike price was $10. Looks like we can get a good amount, so about 60 cents. I'm just going to plug in, right? Expiration date was the 21st, so 11/21. And how many contracts? We'll just go ahead and say, we'll go 5 contracts, okay? Now, what does that look like? Okay, that is a 6% return. Annualized, that is a 60% annual return here. I think you'd be buying Webull at an amazing price. And if it didn't get there in the course of 36 days, you're making a nice 6%. I have no problem. Either way, it's a win-win for me. I have no problem doing that. That is the play I would do. Again, this is not financial advice. This is all educational of like how I would run the wheel, how I would place my CSPs, taking a look at these charts, okay? Next one, let's go take a look here. Zeta, AI, pretty much AI marketing, pretty much. That's the easiest way to explain it, but what am I looking at here? We're below the 50-day at 1959. That's a good news. Okay, then we have our bottom Bollinger Band right here at 18, and 1650 looks like a 200-day moving average where we would find support, right? Do I think it's going to come down here? I do think it could come down this low, just to fill this gap area that's right here. Okay, because we gapped up. I'm assuming this had something to do with earnings or maybe just an August boom. We do have this gap down here. I don't see 13 coming into play unless we had some sort of macroeconomic, like, crash like April, I guess. But long-term wise, I think this company's doing great. Again, we got RSI of 41. Very few times it was under 41. Would have been down here. Again, during June, where's April? Okay, April again, RSI was 34. Okay, we're barely above the April crash RSI of 34. I think the lowest, it looks like 29. Okay, we're not up here. We're not in the 70 range or anything. We're buying down here in this 40 or under value. Okay, so I think that's a great spot. So let's take a look at Zeta. All right, and I'm doing kind of the monthly time frame for all of them. I like a little more time right now with the market's conditions. A little bit better premium, a little bit better buying opportunities, I do believe, at the 36 days right now on November 21st. So it looks like we got a 17. Oh, let me go sell put. Sorry. So we got a 1750 and a 15. So I don't like these deltas too much and the price targets they're giving us, right? 1750 is below our band, but not very much, and it's kind of it's not right in the middle. I'd prefer 17 is what I'd prefer. So what we will do on this one, we will go to November 14th, and we'll see what 17 is looking like for us. And there we go. We got $1.15. So what would that put us at, right? That would put us at a nice 1585. Yeah, 1585. I would have no problem owning Zeta at 1585, as it would put us actually right below that gap fill. Okay, so that's exactly what I would be looking for. So I'd be looking at this 17 for $1.15. All right. So I'm actually going to put this stuff on our comparison tool just to make it easier. So what we're going to do is bull. Let me go back and take a look. So it's bull 10.60. Okay. 10.60 cents on 11.21. Okay, I'm going to go as if we have 5,000 to play with. This will just maximize how your total 5,000 that you can play with is. All right. All right, so let's go take a look here. Oops, 60 cents. I was wondering why that was off. There it goes. All right, so then we have Zeta. Okay. We're looking for the $17, and it was currently $1.15. Okay. And that was on 11.14. Okay. So what does that look like? That's also a nice 6.76%. Right. For Webull, we're looking to buy the stock about 12.5% lower than it currently is, so it would need another big drop. Okay, Zeta would need another about 7%, but I'm actually wanting to be assigned on Zeta, so I have no problem. I mean, I want to be assigned on all of these, but I don't mind that it's not as far as a drop as this. Okay, and it's 29 days, not 36 days. Okay, so we have that one there, and you can do 3 contracts with your $5 grand available. Let's go take a look. Okay, so we have the IWM. I have this on here because I'm more bullish on the IWM. Going forward, I am not a holder of the index. I just had it on my chart just to show you guys. We're holding a lot more support. We have yet to come down here and test this 50-day moving average. It stayed strong right above it. Here's the last time it kind of crossed and touched it, right? We bounced off of it very nicely. So I'm going to be looking for this 237, 235 range to hold for the IWM, all right? So another one, this one, if you are very bullish on Ethereum in the long run, like I am, I have no problem with this one. It's SBET, the second largest treasury for holding Ethereum. Now, I don't like just buying SBET shares. I like to, because I just want to hold it. It's not so much I want to run the wheel on it, but I want to try to buy it for cheaper. So SBET is one of the ones I run cash secured puts on, okay? So as you can see, this band is getting really tight, really tight, really tight. We're going to come down and probably touch this nice 200-day moving average. Maybe down here, but last time it touched it and held it, right, we had a huge run up, right? We were at $9 down here and had a huge run up to 40. So I think that still can play out here. I think we could touch this, and I think we could run right back up to 40 and test those levels. I believe in Ethereum long run, so if it's a year, 2 years out, I don't have a problem. But the premiums are really juicy. And you can buy it for cheaper. All right, so let's go take a look at what SBET does look like, okay? If we take a look at SBET's options here, sell puts, let's go ahead and take a look at what the 21st does offer us. Okay, we got plenty of strikes here, all right? All right, where do we want to be based on this chart? Okay, this 200-day moving average is right at 13. So, question is, if you want to be assigned, more likely to be assigned right at a 36 delta, take that one. If you're like, I want to just really own it at a super cheap price, so if it's under 13, under the 200-day, I will buy it, but if it's not under it, I don't want it. Do the 13, all right? So the 13 is what we're going to do here. We have the 13, and it's about a 105 premium, all right? So we're going to go ahead and plug that in. SBET 13, we got a nice 105, and that is on 11.21, all right? So what are we looking at here? We're looking at about an 8%, okay? Now, I know a lot of people are super against the premium chasing up in this range, okay? Now, I'm not running the wheel strategy at the point where it's like, I just want to make my 1 or 2% a month and that's it. Like, my goal is actually to be assigned on these shares because I have a long-term outlook, okay, for owning them and riding the wave. And I believe in the long term, these companies are good. That's why I buy them, Okay. I'm not buying them to day trade or swing them. I'm looking to buy them in the next 30 days and over the course of the next, 30 days. If it happens in a month, awesome. If it happens over the course of 6 months, no problem. I'll wait. Okay. But I believe in long-term growth. I'm not buying companies just because the premiums are juicy. It's because I actually believe in the company itself. It just happens that the premiums are juicier because they are growth companies. They're not boring dividend companies. And there's nothing wrong with boring dividend companies. But at my age and time frame and the growth that I am anticipating and want to have, I am sticking with growth companies. Okay. So that is SBET. We're looking at 8%. We're looking to buy it for another 12% drop from its current price. Okay. Looking at 8%, that's a nice 81, 82% annual return if you can repeat this every 36 days. Awesome. Okay. On to the next one. We're going to go ahead and look at Fubo. Okay. Fubo's not, it's super cheap stock, obviously. It's a nice $3.71. Okay. I believe in Fubo for sure long term. As you know, they had their boom in COVID time, like every streaming platform did. Okay. We were all the way up here, I don't know, $40, $60 range. Yeah. Okay. Now we're down here, down in the fours, down in the threes. Exactly where you want to be buying these. Okay, we're at the bottom of the band. We have the nice 200-day moving average right at a 350. So what do the premiums look like for Fubo? Okay, especially with the merger that's now been approved by shareholders to merge with Disney. Disney, Hulu, ESPN. Fubo being one of the largest sports streaming networks, especially internationally. I got tons of buddies that are part of Fubo that stream. They're huge, okay? What's great about them, if they do that merger, I believe in the earnings is within a week, maybe two. They are going to, what I believe they're going to do is they are going to raise guidance. Okay. If that merger now is official, right, and they can go ahead and start giving out guidance based on the new data given from Disney, Hulu, and ESPN on streaming and the members and everything. Guidance should be bumped huge. And if guidance gets bumped huge, this thing pops all the way from 4 to 6 to even possibly 10. And then throughout the years coming, as guidance is met and it beats expectations, the sky's the ceiling now with this potentially. So I am loading up. So let's go take a look. Go to Fubo TV. Don't get me crazy on this camera right now. All right, so we're going to go trade. We're going to go ahead and look out further. Right now, if you wanted to get assigned, you'd look at these weeklies, okay? If you wanted to get assigned, sell. Sorry, I always forget to hit that sell put. I'm just automatically thinking cash secured puts, okay? Premiums aren't that great, right? Likelihood, I don't know. We can go take a look at it. Let's plug it into the calculator before I just say anything. All right, we got Fubo. That's the 350. And what was the premium? We had 8 cents on the premium here. And that was for, I believe, 11.21. Okay. There's nothing wrong with this premium. I'm not saying there's nothing wrong with it. But if I am super bullish on Fubo and I want the shares, okay, what do I get to own this for? I get to own this for $3.42. Okay. What do I get to own it here? Okay. I get to own it for, well, basically, if you get this for 40 cents, I'd get to own it for $3.60, right? 4 minus 40 cents is $3.60. $3.50 minus 8 cents, which I don't think they would even let you do 8 cents. I think they would make you actually do 5 cents because I think it has to be in 5-cent increments for Fubo just because it's a low expense one. Okay. Or you could do both. You could split this up for sure. You are more likely going to be assigned. Oh, that's October 24th. I was wondering why the premium was so low. Oh, it's November 21st. There we go. 33 cents. That makes more sense. Deal. Take it. I'm in. Okay. I need to go put these ones in. Okay. I have no problem doing this. Okay. I'm going to go ahead and make a 9.5%. I believe in Fubo long term. I got no problem. Go ahead and give me the shares. Okay. Especially at 350, gives me really down at the 317 range. If we go take a look at that chart here, 317. I don't know the last time it was 317. Okay, somewhere in this little run up here. Okay, it was April, May. Okay, the recovery from basically, it doesn't even look like April had a huge effect on it. I mean, it did, but not really, right? We're down here at 272. So basically, April, bad news, whole market moves down, right? We're barely down on the stock. No problem, okay? No problem. So 350, 33 cents, November 21st is an easy drop in the bucket for me, all right? Nice 9.5%. Complete that every 36 days. That's a 95% return annually, okay? PGY. Now, if you don't know about them, I would do homework. Obviously, never listen to somebody on YouTube and just blindly follow, okay? If you do, hope it works out. But do your homework, okay? So what I think's happening right here is, right, it's going for this gap fill down here to $24, which is why this is kind of pointing down. This might even start curling up. It's not quite ready for us. It is at the bottom of the band, and you could start dollar cost averaging into this, that's for sure. There's no problem with dollar cost averaging, but we're going for this gap fill. We're going to let this 200-day moving average move up. The RSI is nice at 36, so that's a good sign. So if you don't know what PGY is, essentially it is AI loan application processing. Big banks. Let's go ahead and just PGY partners. Okay. I'm going to tell you the big one for me, which I invest in a bank that uses them. SoFi. SoFi is huge on loan platforms. Therefore, right, I should probably invest also in the company that is processing their loan platforms that isn't just, investing, or I should invest in PGY if I believe that SoFi is going to be successful off of their loan platform and their processing, and how, their restrictions based on who can get a loan from them. PGY is the one that is basically the backbone of that, right? It's so yeah, PGY, and it's not popping up here. I think I asked AI last time. There it is. Let's just ask it. PGY partners. Let's see if it populates it real quick. There you go. Citizens, TD, Wells Fargo, Texas, Bank of Montreal. I know SoFi's on that list. And I think there's another big name. I mean, those are the top five, right? U.S. Bank, Citizens, TD Bank, Wells Fargo, Texas, Bank of Montreal. Just gave me the same list. Awesome. Love to read that back to back. Anyway, moving on. So let's go ahead and look at PGY's cash secured puts option chain here. Trade, sell, put. We got here November 21st, PGY. Okay. What does the chart look like? Okay. So we have 24 bottom of this band. We have the 200-day moving average basically at 20. Okay. So I'm looking for anywhere in this little zone. So let's take a look at what that 36 days looks like. Okay. All right. So 24 would be your starting point, because I like a 30 delta. It's the nice premium. So let's plug this in, and let's see where we can land. All right, let's plug this info in. 24 210. Okay. So we got PGY. We got a 24. We got a 210 premium, and that is on 1121. Okay. That is a 8.75%. You do not need to go there. As far as high. So this one is where I would probably do my first cash secured put. That would be my first entry. That would not be my all-in-one kind of cash secured put. So I would probably start with this as like the beginner. As we trickle down closer to that $24, right? Let's just say the stock price, right, starts trickling down, and now we're at 24. Anywhere close, like I might get assigned. What I would do is I'm going to then dollar cost average down, and then I will go for this 22 when this is at a 30 delta, okay? And then once that's at a 30 delta and maybe we trickle down closer to 22, I will then start doing the 20s as those become a 30 delta, okay? That is how you dollar cost average into cash secured puts, Okay, that is a big part. You do not just go all in on one strike price. You need to make sure that you protect yourself and dollar cost average into it. Okay, so basically, if I had 5 grand, I would probably do one. I would let closer to this expiration date or closer we get to 22 or 23. If I can only do one more, that's when I would place another one. I'd let the price fall below your strike before placing another one. Okay. That is PGY. Last one, Lemonade. If you don't know Lemonade, Lemonade is an AI insurance company. They are going to be a disruptor the same way HIMS is a disruptor in telehealth. They are AI direct to consumer. You're going to have Lemonade, and if you haven't used Lemonade's platform, I highly recommend it. I know they're just rolling out auto insurance to most states at this point. Pet insurance, if you go on there and just get a quote for pet insurance, it's super quick. Just answer the questions about your pet. I mean, it's like a 15-question questionnaire, populates a quote, sign up, don't sign up, and move on. You don't need to talk to somebody, give them details about your whole life story. It's really nice. So we have moving average at 40. We are at the bottom of the Bollinger Band at 47, 48. We're below the 50-day moving average. So we are kind of in the middle here. So what I'm going to do is I'm just going to look at the option chain, find my 30 delta, and that's what I would place. So let's go ahead and take a look. We got Lemonade. Plus, I just like thinking of lemonade, I think. It's kind of just like makes me happy. Let's take a look here. Sell, put. We're going to go ahead and take a look here. Where's our November 21st? Let's go down. Where's our 30? We got 36 delta. We got a 23 delta. Okay. This is basically a 10% return. I mean, that's a 10% return. Okay. I would think that is if you want to be assigned. Okay. If you don't want to be assigned, well, not if you don't want to be assigned, but meaning if you would like to be assigned but at more of a deal, okay, a true deal, this is what you'd go for, okay? And still a juicy premium, so let's go ahead and plug that in, okay? Man, we ran out of spots. Let's see here. Which one? Actually, can I do this? Bring it on over. All right, cool. So we have, what was the stock? What was I looking? Lemonade. Okay. The price I was looking at was the $40 one, and we were looking at a $2.43. Went around that to $2.45, and you were looking at $11.21 as the expiration date. Okay. And I'm assuming this is going to be one contract. Okay. So we'd be looking to buy Lemonade at a 16% discount from its current price. If it can't get down to 16% for us to be assigned this stock, we would still make a nice 6% in premium. Okay. I have no problem buying Lemonade at $40 or lower than that, because as you can see, our RSI is currently 40. If we had a nice another, I don't know, what was that? The nice additional 16% drop on Lemonade. First of all, it would throw us right in this nice consolidation zone where everything is pretty much buying at a nice dip, right? We had a nice run up. We got this dip buying opportunity. We have a nice run up. If we can come back down in this dip buying opportunity, I have no problem adding Lemonade, okay? So if we take a look at all of our options here that we would be looking at right now, can this copy over option 5? Oh, all right. If we take a look here, Webull, we are looking at a 6% premium on a 14% drop. That's amazing. A 6% premium on another 7% drop. Zeta, long term, I think given this earnings, if you do this one, even this earnings, if they hit the way we think they're going to hit and how the community is talking about them and how the CEO is very confident in what they are doing, you will probably get to close this one out early. Again, none of this is financial advice, just what I am looking at. SBET, if you are a believer in Ethereum, okay, this is a treasury, okay? They are the second largest holder of Ethereum, okay? I believe that they will do good things as Ethereum has its moment, okay? Opportunity is now while it's pulling back. When others are scared, that is when we buy, okay? Fubo, streaming, TV, if you believe that the American people and international people are going to continue watching live sports and streaming platforms, and that's not going away anytime soon. Fubo, okay? Nice, buying it at a 5% dip from its current price, especially after a Disney, Hulu, ESPN merger happening. Then I would be, it hasn't even gone up on really that news. When it did go up on the initial news that they were in talks about it, they didn't even have the approval. None of it was even written. It ran up to $6.45. Okay, we're down, nearly 40% pullback from the current price. Okay, so looking for another 5%. If I can't get that 5% drop, I'm still going to be making a 9.5% in premium. I'm looking for a 13% drop in PGY. That is going to give me another 9% in premium if I can't collect it. Okay. And then this is going to be a 16% drop in Lemonade with a 6% premium. Okay. Again, here's this nice premium that we would be collecting over the course of 36 days. This is with a $5,000 account. If you are looking at more capital, I guess, I don't know, let's plug in 20,000. Okay. Well, that would be 1,200, 1,300, 1,600, 1,800, 1,700. Okay. This would be, what is that? That's 4,000 a contract. So is that 5 contracts roughly? Yeah. 5 contracts. So 1,200. Okay. There's your premium based on 20,000. Just depends. Account size is all that changes there, but everyone is capable of doing this as long as, 5,000. I think the most amount you have to have would be this 4,000. Okay. 4,000 allows you 1 contract here, 2 contracts, 11 contracts, 3 contracts. Okay. So 4,000 minimum to at least get into the Lemonade one. Other than that, you can have 2,400, 350 bucks. Okay. 1,300, 1,700, and 1,000. Okay. That is the capital you need to make these trades. We just have the 4,000 fixed in there. It optimizes the amount of contracts you can use. And yeah, those are my top plays as of right now with the market correction. Dollar cost average, protect yourself as well. But I think these are great outlooks. These are the ones I am keeping an eye on. These are the ones I am participating in. All right. I'll see you guys on the next one, Chill Investors.